Alrighty, welcome to the Sunday Legion Live. This is where I talk about trade ideas, trade setups, I talk about the overall market, and I also break down the tickers of the Legion members. Okay, so if you guys don't know, I'm Greg Breheim. I'm a CMT, a Chartered Market Technician. Am I the best trader in the world? No, but I'm getting better each and every day. And I am a pretty good analyst. So I do want to forecast some stock prices. I want to give my thoughts for the upcoming week. Both maybe short term and longer term. So first up, what I'm actually going to do is I'm going to go over some of my trade ideas. And actually, first I want to bring up, this is the earnings calendar right now for this week. So interesting earnings. Notable on Tuesday is Tesla and Google Alphabet. Of course, end phase is going to be interesting to see what's going on with the solar sector. We got Visa. I got some other stocks over here. We got Chipotle, Ford, IBM. IBM is a decent holding in my Roth IRA, and it pays really good dividends. And they are benefiting from AI, so I want to see how that's going to go. I would like to buy a dip on IBM. I'd like to potentially wheel Ford if I could get a dip. 3M would be notable on Friday. They've been struggling for a while. AstraZeneca, AZN, let's see how that holds up. We got some healthcare stocks. So got Coca-Cola, boring stocks over there. So a lot of interesting earnings this upcoming week. And we just want to navigate them. But I first want to note some interesting trade ideas, some trade setups. So lately, you guys, if you're a Legion member, you know I've been talking a lot about the poor man's covered call. And basically what that means is you buy a leap call option on something, but then you can sell weekly call options against that leap call option. And I think Mara could be a potential candidate for this. So what does that really mean? I go to the option chain and I can go out to January 2026, and I'm looking at buying like the 30 strike call option. It'll cost you a little bit over $1,000, let's say $1,100. And after that, that's kind of like your placeholder for 100 shares. Of course, I could just buy 100 shares right now of Mara, and that would cost $2,473 if I were to buy it at market. But then what I can do is I can actually sell weekly covered call options, and I can go over to the July 26th, 2024, and I can even extend out my strikes. I'm not going to go into the full strategy today, the whole risk reward profile, but you can sell decently far out of the money options. And look, I can collect a 59-cent credit or $59 guaranteed this upcoming week. So the premium is really high, and in just about 10 or 20 weeks, you can have the entire leap option paid for and risk-free. And of course, if Mara explodes higher, you get paid on that leap option. The risk with a poor man's covered call is actually if the stock goes up way too much in the short term and your leap call option can't actually finance that. So what you do is you'd actually buy to close the short call, and then you'd sell to close the leap call option. So that's how you can cash flow Mara with just $1,100 in your trading account. So pretty cool idea. Interestingly enough, last week, CRWD was dropping, came straight into the 200-day moving average. I would like to get CrowdStrike maybe at like the 250 area. Otherwise, there may be some day trades to be had. Of course, if you break Friday's high, you could squeeze another 5% or so. If you break Friday's low, though, it does have risk to the downside, maybe 13% or more. Maybe there might be a little bit of demand at that 270 area. Microsoft, we'll see how Microsoft opens up. We do have the NASDAQ futures trading higher right now. I did trade this with futures, which if you guys are in the Legion, there will be more futures content coming out. I think it's one of the better ways to day trade. And you can even trade like simple setups like this. I just bought this breakout and I literally sold like a few minutes later. So you can go for the bigger wins. You can go for the quick scalps, whatever you're looking for. So we'll see if Microsoft, if it really starts to break underneath 435, then it could potentially flush down to this 428 area. Otherwise, if it breaks Friday's high, it could start to recover just a little bit. Usually when news like this happens, you kind of just want to wait for the dust to settle. And that leads me into, so the CRWD and Microsoft, messing up, leads opportunity for the hack ETF. So this is actually a cybersecurity ETF. And what's cool about this is if it breaks out over 6640, you could see an all-time high breakout setup. And it is an ETF, so it is more diversified. You can see if I can get a hold of the holdings real quick right up here, but maybe not. Either way, the hack ETF could be interesting for long shares. Okay? Another idea, I want to take a look at oil. You can take a look at USO or /CL. It is up right now, so maybe if oil comes into resistance, I could potentially short oil with futures contracts. I can buy put options on USO, or I can go long on SCO. So if SCO maybe comes back to like 1586, maybe it could be a dip buy. Maybe oil can potentially drop and SCO can go higher. And that would have to do with increase of supply of oil and a decrease in demand of oil. We'll see how that gets affected over time, though. I'm not married to that trade. It's just an uncorrelated asset. Another stock that I'm looking at to potentially short is actually going to be Snow. And again, none of this is financial advice. You guys know the drill. I'm just noting potential setups. The market could be completely different on Monday. But if Snow bounces and rejects this like 134 area, could be looking at put debit spreads. I actually do have a put debit spread already right here. And it's August 16th. I bought the 135 put and I sold the 130 put. So that just basically means I'm risking about $250 to make $250. And if it's underneath 130 by the expiration date, August 16th, I'll make the 250. If Snow presses up and squeezes and goes above 135, I'll lose the 250. So simple setup right there on Snow. Another one is ANF. So this is Abercrombie and Fitch. If this could break maybe underneath 150, maybe we could see a flush. I'm not married to that one, but Abercrombie and Fitch is not a tech stock. And so I want to see how relative strength holds up or how relative strength breaks down. And of course, it could continue to bounce from here. Another one that I'm looking at is a CCL cash secured put, but you could even do what's called a ratio spread, a put ratio spread. This is actually where you buy a put spread. Oh, hold on. I need to close some of these orders. Essentially right here. Okay, there we go. So basically I'm buying the 8 put, but I'm selling 2 of the 7.5 puts. What that does is it makes a put debit spread, but also a cash secured put. This is cool because you win in multiple scenarios. You win as if it's above 1750. You win even if it closes at 1750, but since you're buying a put debit spread, you actually get extra profits if it closes right at 1750. I'm not going to go too nerdy on this, but essentially this is where you make a ton of money. This is where you make a little bit of money. Still make good money. You still make good money even right up to here, like 1725. Still making money. We'll label that blue. And then you only really lose money if it really, really tanks. And even then, you'd only lose a little bit because you have that put debit spread. So this is a trade that I could take with size. So remember that put ratio spread. It is a put debit spread. You can see the strikes, but I'm selling 2 of the 7.5 puts. And I'm trying to collect a credit of 40 cents, but you could collect a credit of 27 cents. All right. In other news, we could take a look at some relatively strong stocks over here. And the first one is ENLC. We can see if this can break out on the weekly. It's starting to. Volume looks okay. We got a breakout on relative strength. So long over 1435. Stop probably underneath this 1384 if you want a tighter stop. If you want a looser stop, you can obviously give it the 200-day moving average. But something like, 1320 could be interesting. The support level really is about that 200-day moving average, as these are more so position trades. But this is ENLC. Let's see if that can get a little bit of a recovery. It does pay a dividend of 13 cents a share. So that's ELNC. Next up, we got is AM. Let's see if AM can break this flat top resistance. And since this is a breakout setup, what I like to do is I like to buy calls on breakout setups. And the premiums I think are pretty low. The 15 strike call may only cost about 20 cents. Maybe if you slap the ask, 25 cents. And you can see if you can't turn that 25 cents and get it in the money, maybe towards $100. So a potential 4x trade in the making on AM if it can break this flat top. I don't know if I'd hold through earnings. And remember, it will drop by 22 cents when it pays the dividend of 22 cents a share on 7/24. Another way to potentially profit from this would be to buy 100 shares and then maybe sell the 15 strike covered call. But then you're really capping your upside. So that's something to consider. But that's AM. That also, this stock you could wheel, but generally when you have a breakout setup like that, you just want to buy a call. That's not advice. Just telling you what I'm thinking. BCS, Barclays ADR. Again, I would probably go with the cash secured put on this, maybe the 11 strike cash secured put. Try to limit 0.25. And then you're agreeing to buy 100 shares at 11. You're getting a guaranteed 25 cents. And if you get assigned, cool. If you don't get assigned, cool. Relative strength in an uptrend. RSI confirming so far, at least recent price action. Higher high on the RSI. Higher high on price. Cool. We do have a bearish divergence from May, so be mindful of that. A lot of these stocks are going to be, dependent based off the IWM. So if IWM can hold this breakout over 210, a lot of these stocks will do well. If IWM fails underneath 210 and puts in a lower high, we could be seeing a bigger correction in the markets. Just taking a look at QQQ, we have this drawn out. Tiny bounce, maybe a bigger sell. Tiny bounce, maybe a bigger sell. We'll see. Volume was a little bit more bearish. Market's got a little bit carried away. That's fine. You have a slight bearish divergence on the daily. Not huge. Tech is the place to be long term. Short term, it's a bit overcooked. I'm flexible, though, on the tech stocks. SMH, similar thing. SMH, back up here, we said I expect sideways to lower price action. Now we got that. If SMH could get oversold, I like leap options. I do still have that SOXS position. I'm just chilling in that. No big deal. Not going to do too much with that. So that really wraps up that. We talked about BCS. You could potentially wheel that. We talked about AM. Another one is this, WWWW. I would just probably buy the 14 strike call on this if it breaks out over 15. Breaks out over 14. Otherwise, you could buy 100 shares and then sell the 15 covered calls. The premium is pretty decent on that. Okay, so that's a long setup. Again, you wouldn't want this to come. This is kind of like a bullish kicking pattern where Thursday you close near the low. Friday you gap up, close near the high. That just trapped all of these people. So really since the beginning of July, buyers have been trapped on WWW. Okay? So those are the main setups that I'm looking at for this upcoming week. I'm going to break down your guys' stocks now. Okay? Let's check it out. Okay. Let's first go over BITO. So this is the Bitcoin Strategy ETF. I am still wheeling this. So I'm chilling in this right now. This has been doing very well for me in terms of the dividends it pays, which is not reflected in the P&L. And of course, the covered calls, which are not reflected in the P&L. And, longer term, I'm bullish on crypto. I'm going to pull up /BTC Bitcoin futures. If you guys remember, a couple weeks ago, I said, look for a quick dip and rip on Bitcoin. That's exactly what happened. It even ripped further than I thought it was going to be. I thought it would struggle a little bit more at the 60,000. But regardless, now we're gapping up about 1% into a supply area. So here's what I think is the most likely scenario. We probably stay in a range between 60 and 70,000. That's what I think is the most likely scenario. And then eventually, longer term, we break out up. If we break underneath 60,000, that would be decently bearish and it would trap a lot of people, I think. And maybe we could be visiting something like 40,000 on Bitcoin. So what I'm going to continue to do is wheel BITO, but I'm going to leave myself ammo to buy it in case it gets oversold near like 16. Okay. And that ties in with the Mara, poor man's covered call. Buying a leap option, selling those weekly covered call options. You collect a crap ton of premium. I've been doing this with QuantumScape, what is it? QS, here we go. QS, that's what it is. So I've been doing this with QS. The premiums have been nice and high. QS may set up a cash secured put opportunity if it gets a little bit more oversold, as the premiums are nice. Yeah, you could sell like the 7 strike put, collect 15 cents. If you get assigned, cool. You just sell juicy premiums on covered calls. The risk is that it just gets destroyed. And earnings are on 724, so maybe wait on that QS, unless you're willing to do the poor man's covered call strategy. So that's another idea. So that covers BITO and Mara right over there. Next up, the next question we have is CELH, Celsius. So Celsius has been in a bear trend. I'm not going to try and, catch the dip. This is a textbook kind of, a little bit of a rollover formation over here. Textbook head and shoulders kind of. You got the neckline. It broke down, retested it, slightly rejected, break out. Supply was strong up near that 96 area. We've been in a bearish trend for a while. So could we get a little bit of a snapback? Sure. Is it worth it? Probably not. I'd trade Celsius as like a day trade. It's a good day trading stock. It moves well in the morning. But swinging, I haven't seen too many of crazy gaps besides right here when it went from 60 down to 51. That's a big drop. That's a decent amount. It does have a high short interest. So what I would do if I was going to go long Celsius, I would wait for bull flags. So wait for like an impulse rally, then a consolidation, then you can buy the breakout. Otherwise, I think it's riskier to dip buy unless it's extremely oversold. That's my thought process. You can check out the 200-week moving average near 35. This company's not going to go bankrupt. It's a good beverage. I enjoy Celsius. But Celsius, yeah, it's just more of a day trading stock in my opinion. It looks like it might want to take out that 45 low. If we take a look at the option chain, it is expected to move plus or minus about $4.45 this week, which seems about right. So yeah, you could potentially be a seller of premium. I would wait for that to potentially break support though. It looks bearish. It's just too low to short and too risky to buy. That's my thoughts on Celsius. Let me know if you want any more commentary on Celsius. CMG, Chipotle, they report earnings this week. So Chipotle, yep, 724. So I was on the Victory Talk podcast actually, and I discussed Chipotle. And right about here, the 60 strike or the 60 support level, Brandon was saying, yeah, is this like the former breakout area? And I was like, yeah, it is. And it got a bounce. But if you ever get a weak bounce and then you take out that low again, that's bearish, that's weak. Now we're getting into an interesting area on Chipotle. The way that I would trade it though, I wouldn't touch it before earnings. I would wait until after earnings and then I'd look for a day trade. Maybe a potential swing trade up to the 61 area. So Chipotle, that'd be my target on that. So it does offer a 12% ROI. And where did I get that level? Well, you have this breakout of that level. It holds it as support, flush. Now, if it gets tested on the bottom side, it would be a fresh test. That's a great place to take profits on longs. Potentially even go short if you're a savage. I don't know if I'd short Chipotle. There are better stocks to short. All right. Next up, we got is TSLL. This is the double levered version of Tesla. So we just want to chart out Tesla. And again, Tesla, been a long candidate ever since this pennant, a long candidate ever since that doji breakout up. We broke above the 200-day moving average, which is bullish. I think that Tesla's just a dip buy if it drops after earnings. Probably dip buy it near like the 210 area. The volume was bullish. Sure, it could break out over 260. Again, Tesla's a day trading stock. I'm not going to try and analyze it too much on the swing trading perspective. We did have a little bit of a pennant last week where we had a high, low, lower, high, higher, low. We did just barely break bear, although it was on declining bearish volume. So, I bet Tesla probably doesn't go too far down or too far up until earnings. Then we'll get the report. The expected move on Tesla is $23. I think that's actually slightly too low of an expected move, meaning I think Tesla can move more than $23 up or down. Move more than $23 this week and it didn't even need earnings. So that's something to consider when it comes to Tesla. Breakouts really over that 260 level. Otherwise, I'd wait for oversold conditions to potentially buy the dip. The way that I would like to buy the dip on Tesla is TSLY. That way I get income as I hold on to Tesla shares. Well, that's totally up to you. If you just want pure growth, you just buy Tesla. If you want a wheel, I think TSLL is good for the wheel. So maybe a TSLL 10 strike cash secured put. Could even sell that before earnings if you're willing to get assigned, maybe even the 9.5. Like, do you really think Tesla 9.5? That'd be a 26% drop on TSLL. That'd be an 8 to 10% drop on Tesla, right? So if Tesla drops 10 to 13%, yeah. That's an idea. TSLL 9.5 strike CSP. It does have earnings risk though. All right, next up is NVDL. This is the double levered long of NVIDIA. So let's break down NVIDIA. So NVIDIA, I'm warned of the bearishness if it can't hold 129. It did not hold 129 for one day and then it cratered. So I'd be leaning sideways to slightly lower based off this trend, although NVIDIA could just be in a consolidation. So if it's gapping up or it's holding this 118 support area, you could kind of see it consolidate and go sideways. I think the hype is slowly dying out with NVIDIA, but that's actually sometimes one of the better times to buy it and accumulate it. If your time horizon is longer than 3 years, this is probably an okay time to buy NVIDIA. I personally would rather just dollar cost average in the QQQ. That way I diversify my holdings, decrease my risk, and potentially even increase my return if NVIDIA doesn't outperform. So I like NVIDIA near the 200-day moving average as a buy. That's not financial advice. Again, I like personally NVDY. The dividends are fat on this one, and it's been paying very, very well. NVDA 96.40 is the spot. I work with a lot of different clients and people DM me all the time. And one person has just hundreds of thousands in cash. And I was like, hey, if you want to, you could just sell like a 96 strike cash secured put, agree to buy NVIDIA at like 96. The premiums were higher just last week. They were 40 cents. They got like 40 cents for that. Cool. And you're basically just putting a cash aside to buy at your price. And because you put that cash aside, you get a little bit of a rebate. And that's the premium on the cash secured put. All right, next up is TSM. So these are more semiconductors. By the way, if you guys participated in Trade Ideas last week, this was a nice gap down from 180 down to 161. ARM puts $100 turned into $1,000. I just took profits. $146 turned into $500 on that gap down. So congratulations if you partook in those Trade Ideas. I should have alerted that for Optimus. The risk was high though. The risk was high on that put, although the reward was high as well. So semiconductors looking a bit weak shorter term. I think they're fine. Like I'm a TSM longer term bull. This is Taiwan Semiconductor. This is a very important chip manufacturer. And, short term, it looks a little bit bearish. I would let it get oversold. Let the RSI come down to like 30. And then you could potentially do like bullish put credit spreads where, let's say, TSM sells off maybe you go out to like August 2nd and you do something like sell the 140, buy the 135. Right now it's only paying 19 cents of credit, but maybe you could get something like 0.6 or even 0.7. And there's a very high probability that TSM closes above 140 by August 2nd. You know, it'd have to drop 15% and stay down 15% for you to lose on that type of a trade. And as that drops, it's more likely to bounce, right? Because of mean reversion. Another way to pick a cash secured put, you guys, is you can pull up stochastics. And this measures speed and momentum as well. And we should just be able to do the stochastic fast. You know, let's add that. And again, so right now the stochastics, the fast stochastics are oversold. If you want to give a little bit more confirmation, you could do the stochastic slow. Stochastic slow, you can kind of see the difference. Okay, interesting. So the stochastic slow, we have some disparity. We can take a look at that a little bit later. But essentially TSM, I'd let it get oversold, maybe do the bullish put credit spreads. But Jonathan was on top of this. Jonathan was on top of the short on TSM up here, like 185. So nice job, Jonathan. Longtime Legion member. Next up is AXP. This was a long setup a while ago, back over 227. Got to move up to 239 for 7%, which is good on options. I'm going to get rid of these stochastics for now. Looking at AXP, we got a gap down and we got a hammer candle. This is tricky because where's your entry and where's your stop? I think it's too late to go long. And if you go short, you need a tight stop. I would leave that alone. It is a relatively strong name, but it has the potential to reject as long as it's underneath 247. Kind of needed to hold that as support, which it did for a bit. Notice this is bullish behavior. Breakout, next day just runs up, pennant, breakout, holds it underneath it. So now if you test that level from the bottom side, you can not so much expect a rejection, but it wouldn't be unreasonable if it rejected from that level. I wouldn't buy it. I wouldn't short it. I'd leave it alone to develop a new setup on AXP. If you're a longer term investor though, you know, the 200-day moving average is kind of your shield or your potential trailing stop level. And if you get too far away from the moving average, you tend to snap back in. The moving average can act as support. It can offer buy areas. Yeah, AXP, nothing too much to it. I think it can be a part of a diversified portfolio, but not for me right now. Hood, this has been good for the wheel. Talked about the breakout over 23. Got a good move up to 24.88 for an 8.2% gain. I closed my hood right at about 23.70 with the covered call, but that was a trade idea last week. Congratulations if you made money on that. Should have made probably around 4 to 6% if you followed me in trade ideas. I just say, looking at Hood, it did break out, it did retest, it is holding. You don't want Hood breaking underneath 2270. As long as Hood's above 2270, it's looking fine for the wheel. Wow, premiums are really high. Do they report earnings? No, they don't. The premiums are very high on Hood, both to the upside and to the downside. You could sell like the 20 strike cash secured put, do a couple of those, and if Hood comes underneath 20, so be it. You get assigned, it drops 14% in a week. You got to own it at 20. You can sell the covered calls. That's my take on Hood. If you're aggressive, you could buy 100 shares over Friday's high. Let's say over 24, call it. And then you could sell covered calls at your target. So you could buy over 24. Maybe you sell like the 26 strike covered call. That's a good gain. 24 to 26, and you get a premium for it. It's 8% gain in a week. Closer to 10% if you add the premium, depending on what it is. So yeah, I think Hood's okay for the wheel. Not my favorite setup. I'd list that as like a B- setup. but it's a setup. That's an idea. Another one is Qualcomm, QCOM, part of the semiconductors. Qualcomm got a bit carried away. It should have probably broken down this bear flag over here. I had a bear flag drawn. It didn't play out. It dropped a little bit, 3%, and then just ripped. This does look top heavy. This is exactly what you kind of see during a top. It's not the perfect volume profile of a head and shoulders pattern, but you do have a left shoulder, a head, a right shoulder. Kind of got that neckline. A little bit more bearish volume, a breakdown in relative strength, a breakdown in the RSI. Yeah, it's as of right now, it looks like it's going lower. It'll probably gap up with the QQQ ETF. That's totally fine. That's cool. So, it is sitting right at support. Let's see how that reacts. There's a gap right here about 166. So that could be to some targets. And that lines up with the 200-day moving average. So not too many trades or setups on Qualcomm. All right. Any idea why F has been going up? It broke out. Lower highs and lower lows kind of got a little bit of a wedge going. You got a breakout right here on relative strength. When did that happen? That was right here. So it broke out on relative strength right there. Ford has been a wheel candidate ever since 12. We've been talking about it since 12. I got called away on my Ford shares. That's totally cool. Now if Ford could come back into 13, that'd be cool. It does have earnings. This is a bearish engulfing after an extended run, so it's not out of the question to see it go sideways to slightly lower. And of course, if it gets back above that bearish engulfing, it could just chop. If you get above the wick, sure, it could continue to break out. But it is a bit extended on this. Now notice, when it rests sideways, that's building the energy to break out again. Volume profile is pretty good. I did just buy a car recently. It is Ford, and it's a good car. So I'm a Ford bull, but only at the right prices, if that makes sense. I'm a picky bull, if that makes sense in this market. And being more picky has always served me than being just like, oh yeah, I'm just going to throw my cash here. I still think the worst investment is better than like a good spend, because you always at least have the intention of making more money. When you spend money, sure, you get utility from it. You can enjoy it. But it had no chance to turn into actual profit for you, at least right then and there. So that is what's cool about the financial markets. So, yeah, Ford, if I could get a good dip, I'd like the 13 strike cash secured put. Maybe you can limit 0.18 on that, 18 cents. Yeah, and that's a good net of support on Ford. Some analysts give Ford a price target of like $19 a share. I'm like, okay, cool. That's how you know if it's approaching that area, time to lighten up. Or what you can do is you can buy a crap ton of Ford, and if you want to, you can cash flow it by actually selling the 19 covered call with a lot of time on it. So look, maybe I don't go out to 2026, but maybe I'm like, I'm cool if Ford jumps up to 19 by January. Cool. I can get not too much, 20 cents. Maybe you could even go up to 16. You get 50 cents, 60 cents, and this is $50 or $60 when you sell that covered call. All right. Where do I find that earnings calendar? You can just search it up on Google Chrome. Yep, earnings whisperers. Yep, poor man's covered call is great for a lower account and stocks that don't pay dividends. Yep, well said. All right. I'm assigned on RUM at 650. Let's check out RUM. Okay. So RUM, big pump up, a pennant that broke bullish. You get a double top and a little bit of sell side activity. If I was assigned on RUM, it closed right at 650. So that means you probably got paid a good premium for that. And that would be a win. If you are not interested in holding the stock longer term, I would just sell that in the pre-market, literally on Monday. Or if you want to give yourself a chance to get some more upside, you could sell the 650 covered call or even the 7 covered call next week. Just continue to wheel it. Understand the downside risk You wouldn't want that breaking too much underneath $6 a share on rum. This is a volatile stock. Notice a lot of lessons though on this one. A little bit of a bearish divergence into this new high on rum. Cool. Got a bit oversold. Bounces. Consolidation, break up. Interesting volume so far. You really there's a breakout buy over 758 if you're like a day trader. I wouldn't swing it, but higher risk, higher reward when it comes to run. In terms of TSLL, you're assigned at 13. Okay. I would just, the premium on the 13 covered call is massive. I would just sell that. Maybe even sell the 14 strike covered call. Man, the premiums are high on Tesla. And sometimes you can get an IV crush where the stock really doesn't do anything. Like Netflix really didn't do too much. I was looking at this pump in the morning. I was like, man, I could fade this. But the spreads were a bit wide and I was managing some other trades. But that's a notable setup in the future. Buy a put after a pump. Put your stop above the high once you see it. Boom. That's a 6% drop. Pretty much straight down. So I would just wait to trade Tesla after earnings. If you got assigned on TSLL and you don't want the risk of earnings, you got probably some good premium for selling the 13 strike cash secured put. You can just sell covered calls at the 13, or you can just sell in the pre-market literally Monday morning. Okay? Those are my thoughts. Hey, do we have any last questions? This has been a good Legion Live. Just some quick notes. Coin was a long setup over 240. Coin's up about 7.2%. Make sure that goes risk-free. Coin looks like it could potentially break out. Just be ready for anything. That stock's volatile. Same with the Bitcoin miners, Hut. Talked about Mara. Uber coming back into the 200-day, kind of whipping all around, higher highs and lower lows. You got a megaphone. Natural gas up slightly right now. UNG, if you got balls of steel, you can wheel this. But I took actually a loss on UNG a while ago. I sold the cash secured put a couple times, got some good premium. Then I got assigned and then I had to stop out. Very happy that I stopped out. Also, we caught this breakout right here. You can buy 100 shares, sell covered calls, get called away. So UNG, the premiums are decent and they do go Wednesday and Friday. FSLR, First Solar, kind of sitting right in front of support. I'm neutral this stock. We can take a look at the TAN sector, the solar sector. Looking a bit weak. I noted its weakness since it was like 45.50. I don't really have too much of an opinion either way. Interest rates slightly rising. I think if you have a lot of cash, TLT and IEF are decent investments. So something to think about. These are bond ETFs. They pay monthly cash flow. Oil, we discussed that setup earlier. ABR, I'm glad I got out of ABR near like 13.20. Could have been a better exit, could have been a worse exit. You can't predict news like that, but luckily the average cost was around 10. But I'd stay away from that. I was called away on VNO for monster profits. If VNO could get oversold into 26.60, a 26, maybe a 25 strike cash secured put could be good. Try to limit 0.50 on that 25 strike cash secured put. That's just an idea for now. S&P 500 gapping up right now. Gonna leave that be for a bit. SoFi, we discussed the long from 630, and since then it went up 28%, but now it's up about 19%. Qs, we'll see how that plays out. CVX, bullish put credit spreads paid last week. We discussed those. Sell the 157.50 strike cash secured puts. Target being a bit weaker. It's one of the weaker stocks in consumer staples, XLP. It did make new highs though, so we'll see how that develops over time. XBI, talked about this breakout over 94.40. Got a good move up to 101. Now if XBI could come back into that 94.50, I might grab some leap call options or some shares. Disney looking pretty weak. Disney might test something like 93 before finding some support, but Mickey Mouse is in trouble right now. Could it bounce? Sure. It's at support. I'd just leave that alone. There are probably better setups, Again, anything can happen too. This is just as I'm reading the chart right now. Silver, I'm still wheeling silver. This has been a good stock for a while. I was up pretty well over here. No. If you account the covered call selling, I'm way up, but we'll see if silver can't break out. If not, I'll leave that one be for now. AMD, big drop. We noted the breakout over 165.50, and it got a good 12% move, but really cratered in. Now closing underneath the 200-day. Watch out on this one. Other than that, though, I don't see any crazy setups. We talked about the relative strength long names. I covered some short setups, some long setups. The CCL put ratio is pretty interesting. I'll probably alert that on Monday. But if not, do we have any other questions? Thank you guys for tuning on in. If you're watching this on YouTube, say hello, comment down below. I might do a few more public live streams as well. On Wednesday, me, Romulus, and Brandon Carter have a masterclass. We're going to talk about our favorite ways to profit in the market. I specialize in options income trading, but we're also going to talk a little bit about futures trading. We're going to talk about position sizing. I'm going to talk a little bit about my trading journey, what went well, what I definitely could have done better. I'm definitely a humble trader, and that's the best trader that you can be because you always just keep getting better and better. Once you feel like you've made it, that's where the market comes and right up the butt. Okay, so be careful. And by being careful, you're going to be able to manage your risk really well. And also, when you start to rack up the wins, you're going to build that confidence to size up, and then you can make more in your winning trades. So I really like options for income. I'm not the best at buying calls or buying puts, but I think I just need to practice holding some of those trades that have the potential to snowball. Again, there's these opportunities, especially every single day with SPX, with SPY, with the 0-day options. So there are a lot of moves to be made, and I want you guys making money. And just remember that there's a high learning curve when it comes to trading, but if you can get over that learning curve, you can start really racking up the wins, and your account can start to compound and snowball. And then if you do have losses in the past, that really doesn't matter. Do you think the multi-millionaire traders that are making a crap ton every year now, they've probably had to blow 50K a year for a couple of years? I'm not saying that you need to do that or that it's glorified, but I'm just saying focus on the upside, focus on what you do well, and that's how you're going to really profit the most in the market. Okay? With that being said, much love, much respect to each and every one of you. I'm signing out. Peace.